Good afternoon. Welcome to our weekly livestock market update. I'm Brownfield News Anchor reporter Megan Grebner. With us is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Really kind of a light week when it comes to reports and analysis and those types of things, and a light trading week. So let's start things off this week and talk about what happened this week in the markets.
Yeah, I think if we start on the cattle side, it is important to remind ourselves that it has been a very light volume week with a lot of sale barns closed over during the Labor Day period, as well as just not a lot of fed cattle that moved for the week. If we look at fed cattle prices, I'd call them down about $1.50 for the week on very light test. When you look at feeder cattle, I would say we were 1 to 5 higher for the week. Seems to me we're seeing some stronger demand for maybe early wheat pasture, as well as I think we got a lot of green grass in many parts of the country that have kept demand for calves fairly high this week. If we look at the choice beef cutout, it was 85 cents higher for the week. Loins, round, and chucks were all higher for the week. We ended with a choice select spread for this week at a little over $2, so we actually moved slightly higher after our low of nearly $1 on that spread last week. On the cash hog side, down nearly $3 for the week on cash hogs. We look at the pork cutout value, it was also down about 80 cents for the week. I think we can talk about the same thing there with belly prices were down there nearly $7 for the week. However, when you look at those belly prices, they still are 45% higher than they were at the same time a year ago. So not maybe the best news in terms of some lower prices in many of these markets, but maybe not the same decline we've seen for the last few weeks at least.
Scott, as we talk about the pork side of things here, to finish returns were released this week. Really, it looks to be some positive news for pork producers.
Yeah, absolutely. I think if you look back at what you and I would have talked about early in 2017, there's no way we would have said June, July, and August would have been the highest months we would have seen since June of 2016. Yet that's what the ISU data gave us this week. August per pig return sitting there at $27.54. You look at the year-to-date profitability, it's sitting right at $20 a hog. I think we would have thought this year much more a break even. So it's some good news on that front. However, we all know hog prices have been moving lower, so I expect as we start to see September and on into October data, we'll start to see some lower returns occurring out of that ISU data.
Really, some other good news on the pork side of things. We had 2 new pork processing plants come online this week. We talked a lot about the one in Iowa, but the one in Coldwater Creek, Michigan, or in Coldwater, Michigan also came online this week, and that's got to be good news as we see an increase in domestic production.
Yeah, you know, Megan, I think a lot of times we talk about these new plants that are coming on board, and we're worried about when they get to full capacity. And I'd like to stop for a minute and remind us when's the last time we had 2 large plants come on in the same year. I think you'd have to look back a long, long time to find that occurring, plus the idea we have more coming on in front of us as well. Yes, we need those plants to probably get to full capacity as soon as possible, but it is very nice to see both of them beginning to process hogs.
And really, you've seen on the slaughter and on the kill side of things, a lot of movement this week, and you have big numbers set for tomorrow to make up for that Monday holiday. We definitely need capacity as soon as possible.
Absolutely. I think we'll continue to run, very heavy runs as we go through the remainder of 2017. If you look at where hog prices have been in the last few weeks, I'll say we're still running above year-ago levels in terms of where those hog prices are. And I just remind us that part of that, I think, is the result of having more capacity out there. And hopefully we won't maybe test the same lows that we did in November of 2016. So those plants are critical to that look ahead.
Big report this week, Scott. Monthly trade data was released. As we take a look at those reports, what are some of the big takeaways on both the beef and the pork side of things?
Yeah, so I guess, I summarize a little bit of what we got out of the July trade data that came out this week. There's some positive, maybe a little bit of mixed news as we go along here. If you look at July beef exports, for example, we were up about 5% year over year, value up 18%. So that at first blush is very good news. Markets like Japan continue to be strong on the beef front for us. However, when you look at the flip side of that, import data coming into the U.S., both Mexico and Canada increased imports of beef. And when you think about the fact that beef exports increased about 22 million pounds, yet imports increased 31, we actually saw net exports go down for the July data. So maybe not such good news when you look at both sides of that trade equation. On the pork side, I think some positive news. You know, we've seen production expanding at a very fast rate in 2017, yet when you look at the percentage of that production we've been exporting, we started the year at about 25.6% and now set right at about 27.5%. So moving more pork out of the United States was certainly needed when we knew we were going to increase production, and we're seeing real results of that right now.
How close do we pay attention to the fact that we imported more than we exported on the beef side in July? Do we maybe pay a little bit more attention if this happens in another month or a couple of months down the road?
Yes, I think it is something we have to pay attention to. You know, one-off maybe is not so troubling, but a trend is something we don't want to see. And oftentimes I remind us, when you look at how the rest of the world had been responding in terms of global meat supplies, and I'll say both beef and pork, we've tended to see the rest of the world growing a little slower than we have been in the U.S. So it's given us an opportunity to maybe capture some market share that we otherwise would have missed. I don't think the rest of the countries in the world are going to continue at that slower growth rate. So I think the competition for global trade continues to get stronger as we look ahead. So it's important to remind ourselves that we have competitors out there. Now, in beef markets in particular, remind us that we probably import lower valued beef products and export some higher valued beef products. So in quantity terms, we were down. I think if we looked at it in value terms, we might still have been modestly up out of that July report.
We know, and we talked about this a lot last year and early this year, that 2016 was no doubt a strong year for exports. As we get further into 2017, how do we watch that, especially as we look at the fact that domestic production has grown significantly this year?
Yeah, it's really interesting when you look at the data that we have, and I kind of look at this on a meat net export as a percent of production discussion. So beef, pork, and chicken. December of 2016, if you take all three of those meats, we were sitting at about 13.5 to 14% of production was actually being exported out of the U.S. And frankly, every month since then, Megan, we've been down. We now sit here in July at right around 11% of those three meats that are actually being exported. That compares back in the, I would say, the heyday of 2012, 2013, where we were closer to 15 to 16% of production being exported. So it has been a slowdown, and I want to be careful about that. So exports have been growing, just not as fast as we've been seeing domestic meat supplies grow. And when those domestic meat supplies grow faster than exports, that means you and I get to consume more products in domestic markets, and that's the one we're going to have to continue to pay attention to.
Let's get into the domestic market a little bit deeper. We talk a lot about exports, internationals, and global supplies, and where we're looking at our next opportunities a lot, but we should probably talk a little bit about what goes on here in the U.S. as we talk about some trends and some interesting facts that happen when we look at availability of meat and consumption. There's some pretty interesting correlations that we can pick up on.
Yeah, so again, staying in this kind of beef, pork, and chicken altogether meat availability discussion, I like to remind us that if you go back to 1981, there were 18 years from 1981 until 2016 where we actually saw increases in meat availability. All right. Of those 18 years, only 4 did we actually see real meat prices go up at the same time meat availability increased. And 2017 is going to be one of those years as well, where we're going to see growth in available meat supplies in that 1 to 2% range, yet prices might be as high as 4% above the 2016 level. We've done that, again, 4 times since 1981, where we saw increases in meat availability and also increases in that real meat price. We've never seen a back-to-back situation where meat supply has increased, domestic meat supply has increased, and real meat prices increased as well.
So one of the years you and I were talking about this was 2004. Another year will be 2017. I think one of those things, maybe one of the things that those years have in common, as we're seeing a big push on the nutrition side of things for an increase in consumption of meat products or high protein diets. So you had what, Atkins in 2004, you have that paleo, primal, macro type diet plan now that like you're seeing a lot of people talk about. How does that play and figure into those consumptions?
Yeah, you're absolutely correct. When you look back at this data, 2004 sticks out very big as another year where we grew available supplies and prices grew nearly 6%. So that Atkins diet, I think, very much was at play. Consumers change their minds, I think, over time in terms of what they're interested in. And we in these industries have to be paying attention to those consumer signals. And the idea of more meat protein in the diet certainly has been helpful to us. I always go, consumers rule at the end of the day here when we talk about what happens in these markets. And so if the demand is for more meat protein, we have that opportunity fitting exactly what the consumer wants. That's a sure way to have success in your industry. I kind of sit here and I go, there's going to be a lot of competition between beef and pork and chicken for that consumer dollar as we look ahead the next couple of years, because all three of those meats are going to keep growing. And what can I do as an individual meat product to distinguish myself and increase the demand for my product relative to the others, I think will be much more important. And looking at these trends towards more meat protein, I think is important for all the industries.
I think you can almost take it one step further and you think about how we produce. And I think about pork as a perfect example in how the consumer drives what we're doing in the industry. You saw a push for lean meats, lean proteins in the early 2000s, late 1990s. And so, and now you're seeing a big push towards healthier fats, and it's kind of changing how we produce and what we look for and what, maybe even some of those smaller butchers are picking up and wanting to process and sell to their customers.
Yeah, there's all kinds of trends that do change over time in terms of what you see consumers wanting. And I think sometimes we're slow to really adjust to what's currently happening from a consumer demand standpoint. But we're certainly seeing the interest in a lot more higher fat content, or at least what we consider better fat in the diet. And again, this idea that meat is not bad, right? Consumers looking for more meat in the diet. Those are good things. But however, I want to come back and go, 2017 really sticks out as a phenomenal year where we increase meat supplies or meat availability, if you will, and are going to get a higher price at the end of the day. I don't know if we do that in 2018 or not right now.
So if we've never had a back-to-back year, or we've never had back-to-back years with those two factors, that would probably lead producers to make the assumption that there's some downside risk coming in the meat side of things. What do producers and what do farmers need to do to protect themselves and mitigate some of that risk?
Yeah, so I do believe, Megan, that, as we look into 2018, there is a chance that we're going to see lower prices. I do say a chance. There's a lot of things that are going to be at play as we go through the next several months, but all else equal, this increase in supplies worries me about where prices go. Understanding what's a good price, I think is important. You still have folks that remember selling $3 calves not that long ago. And I go, if you're going to wait to lock in any kind of return until you see $3 calves, you're not going to have to worry about locking in prices. Understanding where your cost of production really sits, and when do I in fact cross over? When do prices get high enough that I cover those cost of productions? Important. And you got to start a marketing plan based on what your particular operation looks like. But doing nothing thinking prices won't fall anymore, I will sometimes say that's a risk management plan. There might be better ones out there. We'll have to wait and see. it's easy to market when you are in an increasing price situation because you always want to stay cash current. However, when you think about prices are declining, that's where using some of these marketing tools available to us might be helpful to some producers to reduce risk at least.
And we've talked about some things for producers that maybe don't want to use the market to manage risk, but there's also ways for them to increase value in their product and use that as a risk management tool as well.
That's correct. We've seen, for example, in the beef side where prime beef values have stayed a lot higher. I think that gives some producers an opportunity to do a different type of risk management. All the time I'll say, as much as maybe producers don't like to hear this from an economist, you gotta cut costs where you can, and that's not cutting costs to where you hurt output, but at least understanding, am I doing everything possible to produce that beef, that pork, that chicken as efficiently as I can? It's much more important when you're talking about prices that are likely moving lower as we move ahead.
Scott, anything else this week?
I don't believe so, Megan.
Next week, we have a big week for reports. WASDE, retail prices, consumer confidence all come out. As we look ahead a little bit to preview the WASDE, what are some things that we're watching for?
I think the markets are very interested in where corn and soybean yields are pegged by USDA in this September report. I think many feel like the August corn yield that USDA put out will, in fact, be lower in the September report. We're starting to see some harvest occur in many parts of the country, so I think we're getting much closer to knowing a lot more about supplies of crops in the bin for this harvest, and markets are going to be very interested in what USDA pegs that harvest at for both corn and soybeans next Tuesday.
Scott, have a great weekend. We'll talk to you next Friday.
That sounds great, Megan.
To have our weekly livestock market update delivered to your email box every Saturday, visit our website, brownfieldagnews.com. Click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner for Brownfield.